This is the October 6th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. What a week it was! Run in circles, scream and shout, the government shut down. It was supposed to be chaos and pandemonium, but what happened? It looked like the U.S. equity markets were celebrating the lack of adult supervision with the government shut down. The Dow hits 47,000 briefly for the first time in history. Now up essentially 10% for the year. The NASDAQ is on fire. Yes, AI mania, we've been covering that, and I have some warnings for you. NASDAQ's up 18%. So this week, Leon Cooperman, longtime investor and a guy that's right a lot of the time, cited Warren Buffett's quote from 1999. And to paraphrase, everybody is focused on stocks. Everybody's made money in stocks, almost everybody. Why? Because it's been a bull market, a relentless bull market since April, but we're starting to see signs that things may be overpriced. So now we go to CNBC's Cramer, and Cramer said it is time to ring the bell and actually take some profits, especially in companies that are losing money. And I'm going to show you how this frenzy is so dangerous with two examples of companies that actually lose money. All right, here we go. This is Oklo. The nuclear industry clearly is getting geared up to power the data centers. The first nuclear reactors, the soonest, is 2027. Lots of money flowing out right now. Here's a company that has no sales in nuclear. It's valued at $19 billion, and it has lost money every year and every quarter since it was founded. Let's go back to the fact that they have zero sales, but you pay $19 billion. They don't have a contract yet. Wow. Some people might be overpaying for stuff. And if a company's not making money in this environment, GDP, by the way, this quarter, estimated by Atlanta Fed, third quarter, is actually 3.8%. That's nearly twice. If you can't make money in this environment, then it could be a world of hurt. This company was valued at 5 in the fourth quarter last year. Now it's 144, 19 billion. No, thank you. Quantum computing. Now, IBM teamed up with HSBC to actually improve their corporate bond trading and the response time for traders when they have a customer inquiry for a specific bond. Wow, they're streamlining that. Used to be you'd have to wait for your trader to come back from lunch to even get a quote, right? But now, well, it's being sped up. This is quantum computing. Here we have a company, $9 billion valuation. This is D-Wave. Now, quantum computing has a bright future, but the question is, at what price, right? This is 40 cents. This is $32. Somewhere in between is probably the right valuation for an up-and-coming quantum computing company. They only have 22 million in sales this past 12 months, but they're valued at 9 billion. Well, 40 times, 45 times sales, that and losing money every year, it seems like that's something I want to wait for. And there are categories where you should probably ring the register, take it off the table right now. If that company's not making money, unless you have a great reason, put it in tactical safety. And some things are getting overpriced. So that was part of today's warning from Cooperman and Cramer. In the meantime, we're partying like it's 1999. Here's a company that is benefiting from AI that actually makes money. Round Rock, Texas-based Dell. Now, not a recommendation for your portfolio till you come down and get a plan. I'm Spencer McGowan, President, McGowanGroup Wealth Management, your financial weatherman. And when we talk about a company, not necessarily a recommendation, but you'll see some of these things in our model portfolios if you're a client. Wow, Dell, we got a nice profit, doing well. They're getting paid to help with the data centers. Their expertise obviously is is clear, and that's a great way at a low multiple with a company that actually makes money and has a dividend. Wow, even Cramer cited NVIDIA because they actually make money, right? That's a better choice than what he pointed out with Oklo that has no customers. But it is a frenzy of overpaying. Now, who else makes money at AI? Who was the original? IBM. IBM has a nice dividend, and they make a profit, and they were doing voice recognition back as early as the 1950s. You may have heard of Watson. They tried that with the drive-through and they got fired at McDonald's because Watson wasn't ready yet. But Watson is gaining steam, and the computing power, the combination of programs, and what they call machine learning, well, artificial intelligence is just much more powerful, and it's becoming human-like, evidenced by Perplexity and others. Dallas, we're switching gears to real estate. I wanted to cover the history of Dallas real estate for the last 5 years. So those of us that own homes in North Texas, this is your home price index. Let's go back to the pandemic. Here we are. The Dallas index was at 200, just above it. And of course, there was a big rush on the pandemic side. People wanted a better environment. They upgraded their houses. They got stimulus checks and PPP loans to help. And price of Dallas homes went up 50%. And it took really less than 2 years to do that. That's huge. Now what's happened? We peaked at about 302. And you can see it flatlined. This surprises me because North Texas has huge migration in, lots of new jobs, lots of financial jobs, but you can see a little decline this year to date. This makes it look bigger. It's 3% for the price of a house so far this year. Average price appreciation for real estate, residential real estate, runs at about 4% longer term, and a 3% decline. That's a 7% underperformance from usual. We'll see how that shakes out. That's one reason you want to subscribe. Last subject, the debt bomb. We've heard about it on the internet. We get those emails that say, oh, it's going to be terrible, the end of America, and the debt bomb. Well, I bring you a little good news for the debt bomb. Wow, what's this? usdebtclock.org. It is a busy website with lots of data. $37.8 trillion in debt. Run in circles, scream and shout. National assets are actually approaching 200 trillion versus the 37.8 trillion in US debt. Something happened here, and this is a sea change, and it dramatically improves the perception of US credit quality. The budget deficit months ago was running at 2.1 trillion. It has decreased to less than 1.9 trillion. That is not a balanced budget. I'm not going there yet. But with the severance packages expiring for 154,000 federal workers, that is about a $200 billion savings. You could make the case that it's now headed for less than 1.7 trillion. That's called improving credit quality, and it will have some impacts on the treasury market going forward. Germany pays less interest than the United States. For my money, I'll go with the United States. And the fact that treasuries are liquid, globally traded, so they're easy, and they're easier than, say, a German bond in terms of the spread. That says interest rates longer term for the US could actually be headed lower, and that would be good for even the high yield market. Thank you for tuning in. We'll be back next week. And remember, networthradio.com, fill out the questionnaire, come down for a plan. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.